Okay, hi everyone, welcome to today's webinar. So for today's session, we are going to be doing our pre-market live analysis. So if you guys have any requests for any charts you'd like me to go through, feel free to pop them into the chat. Okay, let's just go ahead and get started. So as per usual, a disclaimer. And risk warning, trading forex and CFDs carries a high level of risk to your capital, and you should only trade with money that you can afford to lose. Trading forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. So here's our agenda for today. We are going to be starting off with the analysis on FX majors, followed by analysis on commodities, crypto, and indices. Yeah. So I'm Melanie, and I'll be your speaker for today. I'm an investment analyst at Rocket, who are finalists for Best FX and Equity Research from the years 2019 to 2021. We specialize in technical analysis with a focus on Fibonacci retracements, extensions, and projections. Okay, so to start off, let's go ahead and look at the events for the upcoming week, the economic events, so that we kind of get an idea of our fundamental analysis, kind of just as at a glance. Oops. Okay. I think this is a little small. Just give me 1 second. Okay. You guys should see my economic calendar now. So I'm using forexfactory.com, but there are a bunch of free economic calendars that you can use. It's completely up to you which you choose to use. Um, so if I click on today's date, we can look at this week's events, 2nd to 6th, apply settings, and I have it filtered to only focus on the orange and red icon events, and these basically represent the medium to high impact events. So if I click on this green filter, we can look at the low impact as well, which is the yellow icon, and any non-economic events, which would be our bank holidays. Excuse me. Okay, so you can see if we take a look at all of the events, there's a lot more events to get through and to cover, so that's why we just prefer to streamline it and focus on the medium to high impact events. Okay, so for this week, on Monday, today we have Australia's retail sales. We also have on Tuesday US final manufacturing PMI, ISM manufacturing PMI and prices, as well as FOMC member Wallace speaking. We also have in Switzerland, our inflationary data, CPI data, expected to remain the same at minus 0.1%. On Wednesday, we have US JOLTS job openings, Australia's GDP, um, also expected to increase to 0.5% from a previous 0.2. We have the Bank of England, Gareth Bailey speaking. On Thursday, we have the ADP non-farm employment change, Euro ECB President Lagarde speaking, US final services PMI, ISM services PMI, crude oil inventories, Fed Chair Powell speaking, in the UK construction PMI, and OPEC meetings. And on Friday, we have US unemployment claims and the IV PMI. So yeah, um, there are a whole bunch of news outlets as well, like Bloomberg, CNBC as well, that you can go ahead and take a look. Some forums if you choose to take a look at that as well. Yeah, so this is just the website that we prefer to use. But yeah, it's entirely up to you what other economic calendars you want to make use of. Okay, let me just pull out my charts and then we can go ahead and take a look at some requests. I can see a couple of requests in the chat, so you'll go ahead and look at that. Okay, let me just check our chat. I think we can start off by looking at DXY. Okay, let me just open the chat and take a look at some requests. Hi Nick, yep, let's go ahead and start off by looking at DXY. Hi Solomon, I'm good, how are you? And hi Andre. Really good to see some familiar faces, or familiar names, I suppose. Okay, let's start off by looking at our weekly time frame and then we can work our way to the smaller time frames. So on our weekly time frame, wait, can you guys see my charts? Yeah. So on our weekly time frame, you can see prices generally moving in an uptrend. Recently, there has been a slight downturn. Okay, on our daily time frame, we see that as well. So let's go ahead and add um our support and resistance levels. So I'm gonna start off by adding our first resistance up here. Okay. Okay, actually this will be my first resistance. This one up here, second resistance. And for my first support, just at this double swing move here. Okay, I'm just highlighting this area because it's a pretty significant level. You can see we have swing high, swing low, um, a really high swing high here, and then price tested this level once again pretty recently. Okay, so now that we have our horizontal levels, we're gonna go in with our Fibonacci levels now. So I'm starting off with a retracement. Let's see um my I think 61.8 lines up with our first support. Even though this 23.6, it does line up with our first resistance, we can't use it because price has already broken out of it. So I'm just gonna keep the 61. Mm, okay, my 127 lines up really nicely with our second resistance. 127. And this once again is our Nike tick shape. Okay, so if you're unfamiliar with this method, just really quickly explain, it's basically a Fibonacci technique. We call it the Fibonacci extension, and we're making use of this shape here. So it's just like a typical Nike tick. If it's inverted, it will look something like that. And what we are doing is basically using um the levels that are greater than 100. So in this case, you can see I'm using the 127. You can use 161 as well. Yeah, and those are the two levels that we normally use, 127 and 161. Okay, my 50% lines up nicely with my first resistance. Okay, here I'm using a Fibonacci projection, which makes use of this tool here. Um, it's the same shape on if you're using MT4, for example. Okay, you just want to make sure that there are 3 points for you to look at. And we namely look at um yeah, the 61, 78, and 100 levels. Which I don't think, yeah, because 100% lines up nicely with our first resistance, but price has already broken out of that, so I'm just gonna remove that since it's no longer valid. Okay, here you can see our 61. Oh, actually, yeah, 61 lines up pretty nicely with our first resistance. Okay, um, I think that's all the Fibonacci levels we have. Uh, yeah, okay. Now let's pull out some indicators to take a look at. Um, so I like to start off by using Ichimoku and MACD because at one glance you can kind of see what the signals are without too much analysis. So Ichimoku is giving us a bit of a bullish signal that doesn't really support our analysis right now. So I'm going to remove that. And if we look at um Let's maybe look at Bollinger Bands. Okay, it's not really telling us much, even though prices are moving below that blue line, that middle blue line. But it's not really showing like a very strong bearish momentum, so I'm not going to use that as well. RSI stochastic. Um, okay, on our RSI, you can kind of see a bit of a bearish divergence here. Oh yes, I guess I didn't mention as well. Here we are going in for a sell, since we typically will follow the general trend, and the recent trend has been pretty bearish, even on our daily time frame. Okay, so this is the analysis here. So on our RSI, what a bearish divergence is that okay, between these two levels, for example, prices have made a lower low, or rather our RSI indicator showing as lower highs, whereas on our price chart, you can see prices making higher highs. So this is kind of speculation that prices are going to continue to drop. Yeah. Another example of this happening in the pretty recent past is between these two levels here. Okay, prices make a higher high, and over here, um, oh no, this is higher high as well. My bad. I'm trying to see if we can find another example of this happening recently. But if not, okay, maybe not. Yeah, I don't think we have that. But on our stochastic, let's see if it shows us that same um signal. Okay, on stochastic instead, it's giving us a hidden resistance level, which is also a bearish signal here as well. Okay, because prices have made a higher high, whereas on our stochastic, prices are just reacting off of this resistance area. Okay, and you can see in the recent past as well, um, every time it reacts, for example here, right, and here as well, prices then start to drop on our RSI, and then on our price chart as well. Again, second time here as well. And you can see our price chart dropping as well. Let's take a look at our moving averages, as well as parabolic saw, just to kind of compare. Okay, let me zoom in. Okay, so if you see really closely, you can kind of see prices moving below our parabolic saw. There's like a couple of blue dots up here, which is from our parabolic saw indicator. Prices are also moving below the moving average indicators. That's pretty recent. Yeah, recent crossovers. Yeah, pretty recent crossover. So both also give us a bearish signal. Okay, my trading view is kind of laggy today. I'm not too sure why. Okay, but if you guys can't see at any point, feel free to let me know. Okay. Let me see. Yeah, there's RSI divergence. Um, stochastic giving us this hidden resistance. So, and MACD also supporting our bearish momentum over here. So, yeah. Does that mean the USD, excuse me, does it mean the USD rally has stopped? I can see a pullback somehow. Um, yeah, so, um, speculation overall is that Trump's policies will push the currency higher. So from I think last Friday, that's when the US dollar started dropping. So it's pulling back from this sharp run upwards recently especially after the elections. But yeah, there is this pullback that we're looking at currently. Okay, there was a bit of a pullback um after Trump announced that the nomination of the hedge fund veteran Scott Besson as Treasury Secretary. So yeah, I think probably because he's a bit more a traditional approach towards economic policy, so that contributed a little bit to that pullback. Okay, next we'll take a look at gold. Okay, so on our weekly time frame, you can see prices generally overall moving upwards as well. Recently, there has been a reversal. Daily time frame, um, yeah, pretty much the same. Let's maybe look at our 4-hour time frame as well. Okay, I'll maybe analyze this on our 4-hour time frame instead. Okay, maybe I'll work from a top-down kind of approach. So I'll kind of add the horizontal levels on our daily time frame first, and then we'll do our analysis on 4 hours. So this will probably be my first resistance, maybe second, and then my first up here, where prices currently are at. And then for my first support, this is our first support up here. Okay, and okay, actually, I think I'm going to place this as my first support instead, and second support here. Okay, overall, it looks like prices are kind of moving upwards, but let's look at our 4-hour time frame. Okay, um, here's my first support, second support, and first resistance up here. Okay, so even though I'm placing the first support here, I'm expecting a bit of a reversal here, from here upwards. Okay, so let's add our, let's take a look at some Fibonacci levels as well. Okay, my 61.8 lines up nicely with my second support. Um, this will be my second support, second resistance, sorry. Um, okay. Let's look at projections. You can see our 61.8 lining up nicely. Okay, my 100 also lines up nicely with my second resistance. So I'm just going to highlight this level here. My 78 and my 78 prices have already broken out of that, so I'm removing that. Um, Okay, we can also, I guess, add another intermediate level here since prices have tested this level quite a few times. Um, you just want to be aware of that level here. And this is also in line with a 50% retracement. 50% and the 61, 50% and 61 also lines up. Okay, I think that's all the levels we have. So like I mentioned earlier, I'm expecting prices to reverse off this level and hit upwards. Okay, yeah, because this level is pretty significant, we can see prices have reversed off this level a couple of times. Uh, yeah, so let's maybe look at some indicators. Okay, prices are moving within the Ichimoku cloud, so that's um kind of a transition signal that's not really telling us much. MACD you can see is giving us a bullish signal, so that supports our analysis. RSI, stochastic, yeah, prices are also moving upwards. Okay, we have prices moving in this ascending trend line on our RSI. Stochastic, not so much. So I'm going to remove that. Let's maybe look at uh, our moving averages, parabolic saw. Okay, we have prices moving above both all of our indicators actually. So again, that's also a bullish signal. Okay, so for this, I've just um added some additional levels just for you to consider, I guess. So the intermediate level here, because it's pretty close to where price is at, so I just wanted to add that since it's also in line with a retracement, and also prices have tested this level quite a number of times. Our second support, of course, is kind of a stop loss if prices break through our first support. Um, and our first resistance, if you're trading on the 4 hour time frame, this is just where I would place it. Again, because price has tested this level quite a few times with a swing high here. But if we're looking, I guess, in at a more long-term perspective, you can place your take profit at the second resistance instead. Okay, since it's in line with a couple of major swing highs, and swing low, and also 3 Fibonacci levels. Okay. Okay. Now, lastly, let's look at um euro dollar. Okay, so on a weekly time frame, prices generally have been dropping. There's been a recent reversal slightly. So let's take a look at that on a shorter time frame. So this is my first support. Okay, this is going to be an intermediate resistance since prices are really close to that level. Mm, okay, maybe here, up here, in line with the two swing lows. Okay, so generally we are expecting prices to continue upwards. Maybe not so much. Okay, I'll maybe place it just below here. Okay, let's maybe look at it on a shorter time frame. This offers support. Um, intermediate resistance. First resistance. And maybe second support just over here. Okay. Now going in with our Fibonacci levels. Okay, my 38.2 lines up nicely. Okay, no, because prices have already broken out of that level with the first resistance, so we can't use that anymore. Okay, first resistance. Okay, my 50% lines up with my second support. On 100% as well. So like I mentioned, um, you don't have to you don't really have to find levels that line up exactly in line with these horizontal levels. These are kind of just more for reference. You are trying to find kind of Fibonacci confluence areas more so than specific levels. So like what I've highlighted here, basically levels that are kind of close to your horizontal levels that we've highlighted. That's good enough. Because when it comes to these areas, they attract price, but they might not be able to push past it. So we're just trying to find these consolidated Fibonacci areas. So I guess for my second support, I place it below here instead. Okay, because um okay, I'll show you guys why later, but generally you should place your stop loss beyond any confluence area, just so that if there's any price reversal, um we won't get stopped out before price reverses. Okay, I'll explain what I mean in a little bit. Okay, so the 127 also, oh, actually, I'll keep the 138 instead, since that's closer to where price is at. Um, okay, that might be all our levels. So now looking at Fibonacci, Ichimoku and MACD. Okay, prices are moving above the clouds, so it's giving us a bullish signal. So that supports our analysis. MACD also giving us bullish. Let's look at RSI, stochastic, Bollinger Bands. Bollinger Bands, you can kind of see a bit of a squeeze here with, yeah, you can kind of see that squeeze. So that's giving us a bit of a bullish signal. MACD, we mentioned that already. RSI, you can see is moving upwards as well, although we don't really have any trend lines here. But yeah, you can see that uptrend. Stochastic isn't really telling us much right now, so I'm going to remove that. Or let's look at our moving averages. You can see prices moving above the our indicators as well. Okay, so that also supports our analysis. Okay. Um so yeah, that's it for euro dollar. Overall, I am expecting prices to continue upwards. Yeah, just be careful of that resistance, that intermediate resistance that we highlighted. Okay, I think we have time for maybe one more. So we can look at pound dollar. Oh, we already looked at gold. I will maybe go back to the chart in a bit, after we're done with pound dollar. So on a weekly time frame, we have prices moving in a downtrend, although there's been a recent reversal slightly. So again, I'll place my first support here. The first resistance up here, and my second resistance maybe here. I'd actually place my first support here instead. And then my second support. Okay, so my 38 lines up with my first resistance. 38 and 50, I think. Oh, 61. Okay. And then also going in with another retracement here. Okay, my 61 lines up with my second support. Okay, my 78.6 also lines up. Okay, my 78.6 lines up with my second support. So this area is a confluence area here. Okay, so I'm expecting prices to continue moving upwards towards our first resistance, maybe even second. Um, let's look at our indicators. Okay, we have prices moving below the cloud, which is a bearish signal, so that doesn't support analysis. MACD, you can see it's giving us a bit of a bullish signal there. Let's look at RSI, stochastic. Okay, stochastic is giving us a hidden support level here. So earlier we talked about hidden resistance. Here it's just the opposite, a hidden support, where prices make higher highs or lower lows. But on our stochastic, it's reacting off this support level. Okay. RSI is not really telling us much here. Okay, let's look at some indicators. Let's look at moving averages. Bollinger Bands aren't really telling us much. Prices have recently crossed over our moving averages, so again, that's a bullish signal. Okay, that's for pound dollar. Any questions? Okay, I think someone requested for gold again, so I'll just quickly go back to that chart before we end off and show you guys. Oh, where did my goal analysis go? That's where I saved it. Okay, yeah, it is. Okay, so yeah. Okay. Um, yeah, if you guys have any other questions, feel free to let me know in the chat. If not, that's all I have for you guys for today. Thank you guys so much for joining me. I hope you guys found this session helpful. And have a great rest of your week, and I'll see you guys again next week. Thanks, everyone. Bye. Sure, thanks, Andre, for joining us. See you again next week. Thanks, everyone. See you guys. Oops. Okay, if you guys have no questions, thank you guys so much for joining me.